It feels like you can't really go anywhere these days without hearing the word recession. It's almost like a constant hum,
Yeah, it really
right
is.
alongside all the, uncertainty about economic policy.
Right.
Especially with trade, things seem to shift constantly. You share some really fascinating material on this.
Mm-hmm.
And today feels like, well, our mission is to maybe cut through some of that anxiety and figure out what's actually going on.
Absolutely. And the sources, they offer a really compelling view, I think. It pushes us to look beyond the sort of immediate headlines, look at history, but also, how the legal side of trade might be changing. The goal is really to give folks some solid insights for navigating this period.
Exactly. So
Mhm.
the way I see it, we're kind of tackling three main things today based on those sources. First, this historical link, right, between recession fears, uncertainty, and how the stock market actually performs.
Yep, the historical patterns.
Second, we're diving into this, frankly, intriguing possibility of the courts stepping in on the whole tariff situation.
A very real possibility, yes.
And then finally, figuring out what kinds of companies might actually do okay, maybe even thrive in all this tariff uncertainty.
Hmm.
Okay, so let's unpack this, starting with, well, this whole recession obsession.
Yeah, and what's fascinating right off the bat is the data presented. It suggests potentially a counterintuitive thing.
Mm.
The map signals analysis, it looked at Google searches for recession, going way back to 2004.
Okay.
And it indicates that when public worry about a recession really spikes, it's historically been, surprisingly, a positive signal for future stock market returns.
Right. It feels almost backwards from what you'd, like, instinctively think.
Totally backwards.
The data breaks it down. You mentioned quartiles of search volume, and it's pretty clear. The more people searching recession, the better the S&P 500 tends to do over the next year.
That's what the historical data shows.
Yeah.
And when you zero in on those really extreme peaks, the top 5% of search volumes, the average S&P 500 gain in the following 12 months has been, well, a pretty impressive 19%.
19%. That is.
Oh.
That's surprising. What's the thinking there? Why would that happen?
Well, it really speaks to the power of contrarian thinking.
Yeah.
When a certain story becomes really widespread, like strong fears of a recession coming,
Yeah.
it often means it's already baked into market prices.
Yeah.
And the actual outcome, well, it frequently turns out better than what everyone was bracing for.
So the crowd gets overly pessimistic, and reality isn't quite as bad.
Pretty much. As the data suggests, widespread worry rarely translates directly into the absolute worst case scenario for investors. It often marks a point of peak fear.
And this pattern isn't just for recession searches, right?
Yeah.
The sources also looked at general economic policy uncertainty
That's correct, yeah.
and found something similar. That big jumps in uncertainty have also been buying opportunities historically.
Exactly. The analysis looked at major spikes in economic policy uncertainty over the last 25 years or so. It shows a very similar trend. Buying during those times when uncertainty was really high has historically led to an average S&P 500 gain of 22.1% just 1 year later.
22.1%. Wow.
22.1. It really underscores the potential rewards, maybe, of staying invested during those periods, even when it feels, uncomfortable.
Yeah, 22% is definitely something to keep in mind when things feel shaky. So the big takeaway here seems to be, okay, all this uncertainty feels unsettling, sure,
Mm-hmm.
but history suggests it often doesn't last forever. And when it eventually eases up, that can create some serious potential for the market.
That seems to be the historical lesson, yes.
Mm-hmm.
Uncertainty tends to dissipate.
Okay, so we've looked at history, fear, uncertainty. But a huge driver of today's anxiety is, let's be honest, the trade situation, the tariffs.
Absolutely.
Let's pivot to that now. How might that evolve? Especially this idea of the courts getting involved.
Indeed. And, trying to predict the next tweet or the next move in the trade war,
Right.
it's become incredibly difficult.
Tell me about it.
The source material points out that even after that recent 21% drop in the S&P 500, specific stock opportunities are popping up. But it also flags this potentially huge development, the courts possibly stepping in.
Right, because trying to follow every twist and turn,
Yeah.
it just feels impossible day to day. But this idea that the courts might actually weigh in, maybe put some limits on the president's ability to just impose tariffs unilaterally,
Mm-hmm.
that's a really interesting angle.
It is.
Especially since, according to the source, the odds seem low that Congress would actually authorize this kind of broad tariff plan anyway.
That's a crucial point. Given the current political climate, the thin Republican majorities, the disagreements within the party on trade,
Right.
It just seems unlikely that a really sweeping tariff agenda would get explicit congressional approval.
Yeah.
And that leads us straight to this lawsuit filed back on April 14th.
Okay, tell us more about that suit. Who's behind it?
Yeah.
What's their core argument?
It's a group of U.S. businesses, and they've taken the administration to the U.S. Court of International Trade. Their challenge is basically saying these recent tariffs are illegal because they were put in place without specific prior authorization from Congress.
And the potential market impact if they win.
Well, a source suggests it could be quite significant. If the courts rule that, yes, congressional approval is needed for these kinds of tariffs, we could see a pretty notable jump in stocks. A relief rally, essentially.
That makes sense. The logic being, if Congress has to sign off, it'll either be really hard to get that approval or whatever tariffs do pass would likely be watered down, less impactful.
Precisely. That seems to be the market's potential interpretation.
So what's the actual legal argument? What makes them think they have a shot at winning this?
The core of it really hangs on the Supreme Court's recent thinking about something called the major questions doctrine.
Major questions, okay.
Yeah, the court's basically said that when an agency, or in this case the executive branch, claims really broad power to decide issues with huge economic and political fallout, they need to show that Congress clearly intended to give them that specific authority. It can't just be inferred from some vague older law.
And the argument is that these sweeping tariffs definitely count as major questions.
Oh, absolutely. I mean, think about it. Tariffs fundamentally change global trade flows. They can significantly raise costs for consumers here at home. They disrupt entire industries.
Yeah, these aren't minor tweaks.
Exactly. These aren't small regulatory adjustments. They're transformative economic policies with massive ripple effects. So the lawsuit argues that relying on, say, the International Emergency Economic Powers Act, or EEPA,
Right, the IEPA.
to act unilaterally on this scale just doesn't meet that clear mandate standard. The argument is that IEPA was meant for genuine national emergencies, not for fundamentally rewriting trade policy without Congress explicitly saying so.
That's a really interesting point about the IEPA's intended scope versus how it's being used here. Makes you wonder how the courts might view that.
It certainly raises the question of potential executive overreach in this context.
Now, the source also mentioned the Federal Reserve. There's been chatter, right, that maybe tariff-driven inflation could tie the Fed's hands, prevent rate cuts.
That's definitely a concern people have raised. If tariffs push prices up consistently, it could make it harder for the Fed to, cut rates to boost the economy.
Sure.
However, the bond market seems to be telling a different story right now.
Ah, right. The source mentioned Fed funds futures. What are they pricing in?
Currently, the bond market is anticipating maybe 2 or 3 rate cuts by the Fed before the end of 2025.
2 or 3 cuts. Starting when?
Potentially starting as early as June is the indication. And you also see the 2-year Treasury yield falling, which often reflects those Fed rate expectations.
Okay.
And the source material seems to agree with the bond market here. It essentially suggests that the Fed the idea that the Fed will step in if markets get really rocky is probably still in play.
Okay, so the market isn't fully buying the inflation prevents cuts argument, at least not yet.
At it.
So we've covered the history suggesting fear can be a contrarian signal.
Mm-hmm.
And we've explored this potential court influence on tariffs. Now let's get to the really practical part. How do you actually approach stock selection in this environment where tariffs are such a big cloud?
Right. Well, given that tariff uncertainty seems to be a primary driver of volatility, the key, according to the source, is really zeroing in on companies best built to withstand that kind of turmoil.
Okay, like what kind of characteristics?
Several things. Companies with steady, consistent earnings tend to hold up better when things are uncertain. Also, stocks in less economically sensitive sectors, counter-cyclical ones.
Makes sense.
And importantly, companies with a strong domestic focus, less exposed to global trade fights.
Right. Stability, less cyclical, more domestic. But the source also really hammered home a couple of other factors, specifically for shielding profits from tariff impacts.
Yes, 2 crucial ones: strong pricing power and high profit margins.
Explain those a bit more. Pricing power means...
Pricing power basically means a company's product or service is in enough demand or is unique enough that they can raise prices without losing a ton of customers.
Gotcha. So they can pass tariff costs along.
Potentially, yes, or absorb them more easily. And high profit margins, well, that just gives them a bigger cushion.
Right.
If tariffs do increase their costs, Companies with fat margins have more room to absorb that hit without their overall profitability taking a massive dive.
So those are the companies best equipped to kind of maintain their earnings, even if tariffs stick around or get worse.
That's the idea. Those are the characteristics to look for if your main concern is navigating tariff uncertainty.
And the source mentioned, I think, that MAT Pro members get a list of some stocks fitting this profile. Domestic-focused, pricing power, good margins.
Yes, it mentioned a diversified list of 30 such stocks is available to them. But for everyone listening, the key takeaway is that strategy. Focus on companies with that pricing control and those healthy margins.
So selectivity is key right now.
Absolutely. In a landscape really dominated by this tariff question, being selective becomes paramount. Focusing on those kinds of durable company characteristics offers a potential path through the volatility, maybe even uncovers opportunities.
All right, so let's just wrap this up. We took a deep dive into this recession obsession, the economic uncertainty,
Mhm.
and the historical data. Well, it suggests maybe all this fear isn't necessarily the negative market signal we assume it is.
Right, the contrarian angle.
We also looked hard at the potential for the courts to step in on tariffs, possibly limiting their scope, which could actually be a positive for
The
stocks.
potential catalyst, yes.
And finally, we really highlighted the importance of being selective, focusing on those companies with, pricing power and strong margins to weather any ongoing tariff issues.
Those are really the core insights from the material we discussed. It emphasizes looking beyond the day-to-day noise, considering history, and watching these potential shifts in the policy and legal arenas.
So maybe a final thought for everyone listening today. Regardless of exactly how the current trade stuff plays out in the short run, how might these bigger shifts in thinking about global trade, fundamentally change long-term business strategies?
Supply chains.
That's a good question.
It's maybe worth thinking beyond just the immediate headlines and tariffs and contemplating the more lasting impact on how the global economy might operate down the road.
Something to mull over. Thanks for taking this deep dive with us.